The stock price cycle has 4 phases. The first one is the accumulation period. The second is a markup period. The third is a distribution period. And the fourth is a markdown period. Here we're looking at a price chart that I copied off of my screen, and this chart shows all 4 phases of the market cycle. In the very front end of the chart, we have what is called accumulation. And what's going on there is that the Wall Street operators are purchasing as much inventory as they can possibly get a hold of in anticipation of selling it to a willing public. The next phase is the markup phase here in the green box. During the markup phase, there's all kinds of excitement generated about a particular stock. That's when you'll hear lots of news stories about a great new invention or whopping earnings surprises or a new CEO. All kinds of energy is generated in order to get the buying public to take a look at the stock and then begin to bid the price up. The next phase is known as distribution. After the price is sufficiently marked up, lots of stock will then come into the market for those willing buyers to purchase. During the distribution phase, the market makers and Wall Street insiders are unloading what's left of the stock that they bought up during the accumulation phase. In many cases, depending on the security, they may also be initiating short positions. Once the distribution phase has fully taken place and there's no more reason to support the price of the stock, then we enter the markdown phase. And the markdown phase is the last part of the stock price business cycle. During the markdown phase, there's generally nothing but bad news that comes out about a company, or there's no news at all. You see, because stocks trade at an auction environment, if there's no excitement, there's no one there to bid the price up. So once the excitement stops, the prices naturally fall. And then the whole process starts over again. If you take any stock that has been around for more than a few years, you can see these phases rolling through over and over and over again. And what I want you to take away from this is that because stock prices move in phases, if you can identify which phase a particular stock happens to be in at the time you're looking at it, you're going to be able to have a pretty good idea of what is going to happen next with that particular security, because the phases always go in order. It's always accumulation, it's always markup, it's always distribution, it's always markdown. It doesn't matter what stock it is, they all go through these phases. Now, depending on the stock, some of them can stay in a single phase for years. That there's many things that determine that. However, they always go through these phases, and if you can identify which phase a stock is in, that's going to give you the power to know whether or not you should trade it, buy it, sell it, or just stay away from it. Currently, there's over 5,000 stocks that are actively traded in the United States. So there's a lot of opportunity, and all 5,000 of these companies are in one stage of this stock price cycle right now. Some of them are in accumulation, some are marking up, some are being distributed, and some are marking down. So there's plenty of opportunity every day.